Why are more and more Chinese people investing in real estate in Japan? Forum. The Japanese are not very familiar with it. Chinese people seem so simple and low-key. Why do so many Chinese tourists come to Japan for tourism, and at the same time, many Chinese people come to Japan to buy houses? Japan is an economically developed country, but it does not pursue a real estate foam economy. Most Japanese families live in rented houses, but they don't spend a lot of money on buying a house. The signing of rooms in Japan is not as lax as in our country. When both parties sign a contract, both the tenant and the owner must be present, and many Japanese people find that the person who came to sign with them is actually Chinese. This makes Japanese people feel deeply saddened. How do Japanese people evaluate a large number of Chinese people buying houses in Japan? For some Japanese people working in real estate, their evaluation of Chinese customers is very simple, just two words: tycoon. When many Chinese people buy a house in Japan, they don't even go to see it on the spot. The real estate agent only needs to open a video to handle it. Even if they personally go to the construction site to open a house, pay for a few rounds, and sign a contract directly, it's no wonder they think China is full of tycoons. In fact, it's not that Chinese people are very wealthy, but because there are many people in our country, there are naturally more wealthy people than in Japan. Moreover, many wealthy people like to invest, so it's not uncommon for them to go to Japan to buy a house. It's just that Japanese people don't like buying a house, which makes Chinese people so different from others. 5 reasons behind the investment boom. 1. Bank of Japan's policy to stimulate loans and lower loan interest rates. 2. Lack of assets in later years, anxiety for elderly care. 3. Individual investors' growing interest in global asset construction. 4. Redevelopment centered around Tokyo. 5. Active real estate investment by enterprises, welcomed by overseas investors. Netizen 1. It is more secure to invest in real estate in areas where people can gather in the future. In Japan, the Tokyo metropolitan area has such advantages. It is not only Japanese people who aspire to migrate to Tokyo, but also more and more foreigners. This means that demand will continue to rise, not afraid of not finding tenants. It can be said that apartments located in first-class Tokyo metropolitan areas such as Gonku, Chiyoda District, and Jonghyang District are what anyone would aspire to. Chinese people who invest in real estate in Japan mostly value asset preservation, bottom hunting opportunities, and appreciation potential. Japan is close, has a high level of social security, a regulated and orderly market, and the Japanese yen is widely recognized as a safe haven currency. Compared to other countries, Japan's real estate investment income is stable and safe. If the location of the property is not a problem, getting something for nothing, and lying down and collecting money are not distant dreams. Netizen 2. 1. Firstly, Japanese intermediaries are relatively reliable. All transactions related to real estate in Japan require the use of Japanese real estate intermediaries. The Japanese real estate market is greatly different from China, and industry regulation is very strict. From the perspective of operating exemption, the level of Japanese real estate intermediaries can be clearly seen. Japan also has a very strict management system for real estate agents. You can check the qualifications of the agent when contacting them. When choosing a real estate agent in Japan, choosing based on the qualifications is equivalent to more than half of the success. 2. Many people say that buying a house in Japan requires high taxes, so why not buy it? More than 18.1% want to go to Japan for real estate speculation. Sorry, the way you played in China is not working well in Japan. I don't know why China's housing prices are so high now. Are there more and more foam? Real estate speculation must be an important reason. The types of real estate-related taxes and fees in Japan are complex, and the amount cannot be ignored. One of the reasons is to prevent the occurrence of real estate speculation. In addition to paying taxes, there are also some other measures in Japan to prevent real estate speculation, such as holding for a certain period of time before the taxes and fees at the time of transfer are reduced. Generally speaking, when buying and holding properties in Japan, the other fees that need to be paid are around 7% of the total property price. There are no hidden operations or opaque fees, and they are not transferable by anyone's will. However, it is up to you to determine whether there is investment value. Netizen 3. In recent years, Japan has become a hotspot for Chinese overseas real estate investment. At the same time, a good investment environment, the 2020 Tokyo Olympics, and other factors have also been a shot in the arm for Japanese real estate, attracting many Chinese people to purchase real estate for investment in Japan. Today, Xiaoju Real Estate can even buy a villa in the suburbs. Japan's land ownership is permanent and has more advantages. Chinese land is mostly owned by the state or group. The service life of land is often divided based on the applicable type of land. Residential land is 70 years old, and industrial land is 50 years old. And in Japan, you can have permanent ownership without worrying about land properties. The current economic environment in Japan is more suitable for investment. During the period from early 2019 to early 2019, the RMB appreciated by about 35% against the Japanese yen, and the asset price of the Japanese yen significantly decreased, making it the best time for Chinese citizens to invest. The Chinese government's sovereign funds hold a large amount of stocks in Japan, further narrowing the economic exchanges between the two countries. The 2020 Olympic Games to be held in Tokyo will develop many themed venues and events around the Olympics, and the city will also be optimized and upgraded accordingly. Osaka City has started redevelopment and design, and the development of the Maida commercial district is nearing completion and is basically put into use. The idea of establishing the capital of Osaka proposed in 2019 has promoted the urban development of Osaka. Since the establishment of the Shanghai Free Trade Zone, the degree of RMB liberalization has increased. Seizing the opportunity of steady RMB growth, overseas investment has become increasingly attractive. Buying a house is convenient for children to study abroad in Japan. Many international students have successfully gone abroad, but their living conditions are poor and life is difficult. If you want your child to study abroad and live a more stable life in Japan, you can buy a house in Japan to provide a more comfortable space for them. According to the self-funded Foreign Student Life Fact Survey, released by the Japanese Ministry of Education, Culture, Science and Technology, 56.3% of international students hope to find employment in Japan after graduation. After homeowners live on their own, if their children graduate or have vacant houses, they can still earn rent or sell them at a high price. Real estate investment can obtain an investment and operation visa to open a company in Japan to invest in real estate. With an annual investment of over 5 million yen, one can basically obtain a renewal of the investment and operation visa. After obtaining a renewal and residing in Japan for more than 5 years, one can apply for residency rights in Japan for up to 10 years. Overseas investment diversification risk refers to the diversification of domestic investment risks, deployed in the relatively stable Japanese real estate market. You can also purchase real estate in Japan as an office location for the company, laying a solid foundation for the company to enter Japan. Buying newly developed business land or dormitory apartments is also a good choice. High financial security. Currently, the relationship between China and Japan is tense, and Japan will not easily disclose investors' personal information and financial situation to China, making investors' personal information and funds more secure and highly confidential. Investing in real estate in Japan has absolute financial security. Nowadays, with the rapid development of the Chinese economy, many high-net-worth individuals in China have developed a strong awareness of wealth preservation and appreciation. The purchase of overseas assets has become an inevitable trend in asset preservation and appreciation. Investing in Japanese real estate is a pretty good choice. Netizen 4. Why do we need to allocate overseas assets? Currently, China's economic environment is entering a new normal. With the decline of the labor population and the rapid rise of labor costs, most enterprises are facing huge challenges in their operations. Chinese people are facing a serious dilemma. Money is no longer easy to earn. In wealth management, we focus more on thinking about the future, how to avoid risks, and how to hold on to wealth. An important path we can see for this issue is overseas asset allocation. From the data, the U.S. stock market has risen by 200% in the past 10 years, which is still the yield after experiencing a severe financial crisis in 2019. If we take longer, the real estate market in the United States has grown more than 10 times since 1977, so there are many high-quality assets in overseas markets. As a comparison, the continuous depreciation of the Chinese yuan in the past 2 years has led to a relative decline in domestic wealth. Due to the uncertainty of the national situation and the entry of the domestic economy into a new normal. The risks accumulated in the economic problems of the past few years have yet to be released, which will continue the depreciation trend of the RMB for a period of time. From this perspective, it is necessary to allocate a portion of assets overseas to reduce risks and increase value. In addition, for life planning, it is important to avoid major risks. These risks are basically not transferred by personal will, such as war, politics, environmental changes, and so on. In China, the most talked about and worried about is often the changes brought about by property laws, wealth concepts, and social humanities. From this perspective, the risk of not allocating overseas assets is significant. There are generally several types of investments that can be made overseas: overseas real estate, foreign exchange deposits, overseas insurance, stocks, bonds, overseas companies, artworks, futures, etc. Perhaps due to the investment preferences of Chinese people, real estate is the preferred choice for many high net worth individuals. Data shows that high net worth individuals who have already purchased properties overseas have an average of 2.9 properties overseas. From the current statistical data, among all assets, overseas real estate accounts for the first choice, and the second is to invest in fixed income products. This is a familiar product, and there are also many domestic products that guarantee both principal and interest. The third is overseas stocks. The best option for overseas stocks is to buy indices, as the specific stock risks are too high to gain a deeper understanding. Fourthly, it is overseas industry. It is difficult for ordinary investors to access it because although there are some overseas equity options that allow people to access overseas industries, the operating conditions and legal relationships of overseas industries differ greatly from those in China. Unless a team helps to do this, it is still difficult for ordinary people to access it. Of course, other products such as insurance and gold are also familiar to everyone, so it can be seen that overseas asset allocation can invest in many more varieties and categories than domestic assets, which can fully diversify risks and achieve stable returns.